G'day, welcome to the Australian Property Podcast. I'm Pete Wargent from AllenWargent Property Buyers. I'm here with Chris Bates from the Alcove Group. Chris, how's your week been?
Oh, doing all right, Pete. As you can see, it's Wednesday morning here, all rubbed up. Big 2 days storm here on the East Coast. Obviously, I'm up on the beaches, but I think places like Kiama have been absolutely smashed. Not too much to report on, to be honest, just in the trenches of winter. My wife's going a volunteering course this weekend, so it's dad time all weekend. But what's been keeping you busy over in the UK?
It's your turn. Yeah, we copped that a little bit earlier in the year in Queensland. Although that said, we sat around for days on end for a cyclone that actually ended up hitting a couple of hours further south. So we wasted a lot of time stockpiling, and shops were closed, and everybody sort of bought their tinned ravioli. But then to be honest, where we were, we didn't get a lot, but we did have weeks and weeks of rain. Dead opposite in London at the moment. So you may have seen on Wimbledon, I don't think we've had any rain in England for about, a few weeks. Everything's turning to straw. It's so dry. So, but test match again this week. So hopefully England can get another win. We'll see how we go. We're just stretched a bit thin at work at the moment because Andrew's on holes. I'm away. And our other guys are working absolutely flat out. So I think, I don't know what you guys are seeing, but inquiry levels seem to be pretty robust, to say the least, given the time of year. I think there's just a general sense that things are starting to pick up. Home value index was out this week from Cotality, 0.6% increase. So you can see there's a bit of momentum, a bit of acceleration happening in the market, especially in Darwin. But also now it looks like in Sydney and Melbourne and pretty much all around the country. So are you getting any more sort of mortgage applications, things starting to warm up at all?
Look, I'd definitely been going quite steady since sort of May. I wouldn't say it's all full throttle yet. I do think it's going to be interesting to see, we've got a 99% chance or whatever it is for a rate cut next week. And so 97, sorry, that's a big difference. But, it's still sort of ending as a terminal sort of at the end of the year, circa sort of 3%. So maybe there's four more rate cuts. And I think that 3 and the 4 actually makes a big difference, right? I think the market will get a bit of momentum, but if we get the RBA rate under 3% by the end of the year, maybe that'll give extra steam coming into February. The market really works on those two cycles, the autumn and the spring period. And I think now's the time actually to be getting ready, making sure you really understand what you can borrow, what's a stretch number for you as well. Obviously a number you'd like to enter the market, but if you had to stretch, this is what your maximum could be. Because by the time properties start coming on in about a month's time, you could find that, the market runs on you. It's interesting though. I think there's, a client actually bought this week, first time basically the property came on the market on Saturday. They looked at it yesterday, got an early viewing, and, they had it all signed up by 11:30 yesterday morning. It was absolutely cracking asset on the Central Coast. And, I think that's what I think we're going to see coming into sort of July, August, September is, buyers are going to really want to pounce before the market gets even more momentum behind it. Particularly as this sort of 5% deposit scheme starts to really hit the media, maybe in September, October, I think we'll see lots of articles regarding that. A few elections this week, Pete. Did you catch those? Not elections. I mean, budgets, sorry.
Oh, well, yes. As you said, it's a lot of this housing policy stuff at the moment seems to relate to first home buyers. So yeah. I think the mortgage market, you guys would know better than anyone, is a bit bifurcated at the moment. You've got the higher income households who are able to borrow. Then you've got the sort of middle and lower income households who are, a lot of them are shut out really by serviceability constraints because we've got the lending assessment buffer. But at the state level, what governments are now doing is bring in policies for first home buyers. So Tasmania announced this week that they've got a first home buyer policy kicking in from 1 July. So that's a first home buyer scheme, but also Queensland's got its booster buy scheme. So you've got in various parts of the country sort of 2% deposits, and then depending on whether you're buying a new build, there might be a first homeowners grant or a stamp duty exemption. So I think this is going to be sort of one of the big trends for the rest of the year. We know the federal government has got their low deposit scheme for first home buyers kicking in from 1 January 2026. But in the meantime, actually, a lot of the state governments are pushing the first home buyer markets as well. So, yeah, I think it's, I think there was a piece from James Kirby in the Australian this week saying we need to be a bit careful about sort of herding first home buyers into property because if you're using a low deposit and if you're buying a new build, obviously there's more risk involved in doing that. So yeah, that is something for first home buyers to watch out for because as we always say, that first step onto your ladder is in many ways the most important. So the one you must get right and sort of do your due diligence and all of that stuff. So yeah, I mean, I guess, there's so many different policies all around the States. It's difficult to cover them all. So do a quick Google search if you're not sure, because there's all kinds of different policies in every state and territory now.
Yeah, it looks like the Victorian government's, for the housing targets, the $1.2 million 2 million homes they want to build. Victoria seems to, they get a little stick, the economy and the government down there and a lot of debt. It's, really struggled with housing, prices haven't gone up down there, which is great for affordability. In terms of, I saw an article today of what's fair value. Good old Shane Oliver, who worked at AMP Capital, saying the property markets are 30% overvalued. It has to really not grow for the next decade to come in line. But, Melbourne was, only 10% overvalued. So that to me sounds like pretty good buying down there. So I think the Melbourne market, they've been really good at just sort of releasing back in the day, a lot of apartments, but I think just the greenfield estates and much more relaxed planning controls to build things like townhouses. And so that's kept a lid on prices. And so that's what, that pro-development mentality down there has really been good for people living in Melbourne to be able to afford a home. I think in New South Wales, I think it's not really the case. And the government here are doing everything they can. I mean, Chris Minns is, really changed the game. I think, I'd say decades of NIMBYism has sort of been squashed due to him. And I mean, the New South Wales budget came out this week. They're guaranteeing sort of pre-sales for developers. That's a really interesting play, allowing developments to get off the ground, even though they haven't got the sales. Because a lot of banks and finance companies don't want to lend to developers unless they've got a guaranteed number of sales, much higher than it was, say, 5 years ago in a pro-development boom. Works in kind. You can do work for the council instead of actually paying contributions to the council. Helping construction workers in TAFE, planning system improvements. I think they're really having a good crack at trying to figure out how do they unlock more supply in Sydney in particular. And you have to sort of dip your hat to it, to be honest, because, and you can see just even a development got approved on Parramatta Road, just, thousands of apartments. It'd be good if you sort of, live a few hundred meters away from that. Maybe not good if you're overlooking, these towers are going to overlook you. And you see more and more media articles, just even today, a media article about a block of 2 houses in Double Bay selling for apartments. It's a big $160 million development block in Rose Bay. You can see in places like along the Ku-ring-gai northern train line, there's some crazy conglomerates of houses coming together and selling to developments along that. There's a lot of development happening there. So, yeah, I think that's just something I've been watching this week is just how the governments react with the budgets. But definitely pro-development in New South Wales right now.
Yeah, it makes me chuckle sometimes when you think back to reading textbooks about free markets and all this kind of thing. And when it comes to the housing market, it's like not a day goes by without another announcement about a first home buyer scheme or a policy announcement to change supply or tax rates for developers overseas and so on. I think one of the interesting things, clearly there's a big construction boom on the way. I think, as you said, a lot of these apartments are starting to get approved. Eventually, we'll start to see them coming out of the ground. I think it'll be quite interesting to see what investors do in this cycle. Through the pandemic, a lot of investors went out to the regions. It's kind of made sense because people were looking for more space. And I saw the Reserve Bank's financial aggregates figures this week had investor credit growth at the highest level in 31 months. So investors are coming back into the market in anticipation of lower interest rates. I was just at a networking event in the UK this week, Property Investors Network, just trying to get a feel for what sort of things are happening in the UK market. And the model there for investors is generally you buy, you renovate, you refinance, you go again. But just chatting to a few of the mortgage brokers over there, there's been a shift, I think, in the past decade. Previously, it was all about London and the home counties, the higher valued properties. But there's been a massive shift to the regions, higher rental yields, much more focus on yield. and also just cheaper markets. And I just wonder with this cycle whether I think after some of the issues we've had with apartments, sort of the new builds, whether people in the investor space might be just more inclined to look for houses, and even if it means going out to a regional market or a cheaper area, because last time around quite a lot of people got caught out buying off the plan, defects, overpaying, overbuilding. So I think that'll be an interesting trend to watch over the next few years.
I think there's definitely a boom in speculation, I would call it, rather than long-term investing. And, a lot of proliferation of, great marketers, I guess, in the buyer's agency space. And what they're marketing on is data and days on market and where's demand outstripping supply. And I think buyer's agents as a collective are moving markets because they're pushing markets way beyond what locals can afford. And I think that's going to continue, Pete. I think that, at the moment it's Darwin, it was Perth, it was Adelaide, and now it's moving also to Melbourne. I think the investors are all confirmation bias. There's like a, echo chamber. They're all saying the same thing, and then they're all pushing up markets together. And because they're all looking for the same metrics, right? So they're all reading the same research, and they're all basically all pumbling into markets. And the problem with that is that you have to be very early to those parties, and you have to get out before the party ends. So I think that's more speculating in property markets. It's all about sort of trying to time a run. It's kind of something called the greater fool theory. Rather than buying an asset where you can sort of put it in the bottom drawer, you basically know that you're not going to sell it through multiple investment cycles and you're going to hold it for 20, 30, 40 years for your retirement. I think that sort of buy and hold strategy, I often see that one works the best because you really limit the transaction costs in buying and selling, and having to pay things like stamp duty, selling costs, and capital gains tax is often forgotten about. So, but I do think there's the play I think right now, which I've got an article that I need to write this week, which I've got other priorities on getting this website up over the next few weeks, is I'd be playing the 5% deposit scheme. I'd be playing in markets that, a lot of first home buyers are going to enter into from January. And I think, as rates go cheaper, owner occupiers enter the market as well as investors. And so you get a double sort of tailwind in property markets as rates fall, because more investors plus more first home buyers plus more upgraders. It's a real demand push.
Yes, that opportunity could get arbitraged away. So this is our weekly 2 cent segment where we go through the big 3 property news stories of the week if we ever stop waffling on. And we also do a bit of your listener questions in a Q&A section at the end, a little session for you to cover off your key questions. So let's start with this first story of the week. It was covered in the Australia and also the AFR. Why Blackstone isn't building in Australia at the moment. So I think if you look at Blackstone, they're the biggest build-to-rent operator in United Kingdom, and they've got a huge global footprint. And you can see that the build-to-rent sector is really starting to work in countries like, already is a big part of the US market, UK. It accounts for a huge share of new builds, but it's not currently stacking up for Blackstone in Australia. I think, even despite the fact they've got a lot of dry powder and they would love to get involved, I mean, their take is that the property tax burden is one of the key hurdles. I think we know construction costs for units are very high in Australia at the moment. That's a problem for all developers. And I guess what, the point of these articles is a bit of a lobbying push for more tax breaks. So the federal government has already reduced withholding tax for non-resident developers, and you've got capital works deductions. But I think some of the challenges are more at the state level, just some of these tax overlays. You've got stamp duty and things like that, which just make it very difficult for developers to get profitable. So my gut feel is the point of these articles really from Blackstone is to say, come on, if you want us to get involved, you're going to have to give us some tax concessions or incentives to start building in Australia. I think it's, my sort of observation of build-to-rent over the years is I think Blackstone has done a couple of small developments in Australia and they can work just fine. It seems to be hard to make them scale. I think that's one of the problems is when you get these sort of really big developments, you sort of lose some of the personal touch. There was a massive one at Canary Wharf in London that basically turned to crap within a couple of years, and the developer went bust. It was just, 1-star reviews as far as the eye can see. So, yeah, sometimes difficult to make this stuff work at scale. And I think the other problem is it's just expensive. I think the build-to-rent stuff in Melbourne, the 2-bedroom apartments are renting for about, 45 grand a year. In Sydney, it might be 50. They're not cheap to rent generally, even if they are convenient. So, yeah, I mean, I guess, Chris, this is something we've talked about a little bit, but it sounds like some of the big institutional funds want to get involved in Australia, but they're kind of crying out for a bit of government assistance, I guess.
Yeah, and I think their lobbying has worked in the past. I think the land tax or the investment tax rate, I think the MIT tax, I think I was speaking to Adam Hurst, say 4 or 5 years ago. He launched his own build-to-rent. He was heading up the Mervat build-to-rent team. Novus, I think, is his build-to-rent company. And they've won some massive projects. Hats off to him as well. He's basically left a big developer and started his own construction firm. And, he was saying one of the things that were holding it back was the way that the taxes work. And so, and I think that's what they absolutely will do. I mean, the government make money on other ways, right? They support the construction world. They take pressure off the rental market. The cities become more viable for international talent. There's lots of pros and cons to when we encourage more development. And so if the government has to put their hand in their own back pocket to maybe not make as much money, I think that's not a bad thing, to be honest. So, I mean, it's interesting. When you're a global fund like Blackstone, though, you can go anywhere in the world. And I read that article too, Pete, and just saw that obviously they can get better ROI if they go to other markets around the world. And, when you've got that, when you're agnostic and you don't have to, you're forced to invest in a certain marketplace, why wouldn't you? And I think Tokyo was an interesting one. I think that's where they found that they could build much more profitably.
I think, yes. I mean, when you think about the current environment, we're not in a zero interest rate environment anymore. If you can get, completely risk-free return on a 10-year government bond of, 4.5%, well, you're going to have to get some pretty decent yields on your build-to-rent developments to make it worthwhile even pursuing them. And, I think, as you said, in some of the other markets, you might get higher rental yields, like in Japan. Or I think in Australia, sometimes there's requirements, for example, that 10% of units might be affordable rentals, let's say 25% of the market rate or something like that, which wouldn't necessarily apply in other countries. So, yeah, there's a few things that are really sort of counting against Australia. I mean, a lot of developers are just generally finding construction costs are very high anyway. So that's quite apart from the challenges that Australia's tax system might present to a non-resident or a foreign developer. So, yeah, I guess that's a watch this space. I think there is some build-to-rent supply coming on, but at the moment, some of those really big players have only really sort of dabbled in the Australia space. So we'll have to see how that plays out. Let's have a look at this second news story, which you already touched on. Generous government incentives risk herding first home buyers into property. So that was our good friend James Kirby at the Australian. So, yeah, I think we've got this kind of two-speed mortgage market, haven't we? I think there's the bulk of probably people active in the market are the higher income households with $200,000 per annum or more of income. But then from 1 July, we've got Queensland, Tasmania, state level first home buyer schemes. And then he said, obviously, New South Wales has got its new policies coming into play to get development happening. And then we've got the federal government low deposit scheme from 1 January. So I think the thing with all of these first home buyer incentives, because they often create market distortions, especially when you get around to those grant or price thresholds. You can find that at auctions, people will bid up to a certain limit and then stop, and you get a sort of a crowding effect around certain price points. I think, there's risks and rewards here potentially for first home buyers. Yeah, I saw a post, I think it was Tom Newman on Facebook, saying if you can't get into the market over the next year as a first home buyer, you need to stop blaming the property market, because there's that many first home buyer schemes around at the moment where you can buy with 2% deposits and government guaranteeing the rest. But I suppose with all these things, just because you can doesn't always mean you should. Yeah, I guess, you guys are at the coalface. I guess you'll start to hear more and more about people coming to you about, should I buy now? Should I wait for my first home buyer deposit scheme? Where are the best places to buy? Are you getting any inquiry yet, or is it still early days for that?
Oh, I don't think the 5%, which starts in January, people are jumping on now. Just because I think it's gone a bit quiet. I think everyone sort of forgot that it's changed. But I do think that it'll be article after article, kind of with the super tax right now. There was just this proliferation of articles all around, this new super changes division 293, I think it is. And I think we're going to see lots and lots of articles at the tail end of this year around. And coming into next year, I sort of agree with that comment, to be honest. I mean, a lot of states have got stamp duty concessions up to a certain price point. And, you can basically buy up to, quite high price points with 5% deposit and with no income caps. And so really, if you can ruffle together 5% deposit, and often a lot of people can do that, right? Because they might have 2 or 3% now. Maybe they could rattle the tin with family or, and just save hard over the next 6 months and try to get up to 5%. You could potentially enter next year. And so I think it's a really good bet for a lot of first-time buyers. You do have to be really careful buying, obviously, a lot of the new builds. But, a little apartment, near a train line, somewhere in Sydney, for example, or a little villa in Melbourne, or maybe a house in Brisbane, etc. So, I do think your options have never been as good. I don't think the incentives have been anywhere near as good as this since I've been broking since 2013. I would say there's more on the table now than there ever has been.
It's hard to keep up. There's so many announcements. Just quoting from James Kirby's article, in what's been described by a veteran property analyst as outlandish, the Queensland government is offering a nation-leading program which lets a buyer with a deposit of just 2% purchase a $1 million home. At the same time, the government is introducing its first home guarantee scheme in due course, where most buyers would only need a 5% deposit. Anyway, Cameron Cusher, formerly of CoreLogic and REA, tells the Money Puzzle podcast this is a slippery slope. These schemes only encourage people to buy more at high prices. I think it's a bit, like a lot of these things, when you get a sugar hit, you don't necessarily think about what happens when you reverse them. But, just like if you go on a crash diet or take a weight loss jab, it can definitely have an instant impact. But what happens when it finishes? Do you just go back to where you were? So that's one of the one of the reasons we don't like these schemes is they just distort everything. You get a big pull forward of first home buyers and then everything stops when the stimulus is withdrawn. But yes, seems to be a necessary evil at the state government level. So I guess, as you said, I'm sure we'll get lots of media on that over the next, probably for the rest of this year and into 2026 when the federal government scheme kicks in. The third story of the week before we do the Q&A, where is Australia's population growing the most? So Tarek Brooker, who's independent journo and analyst, notes there's been a 1.88 million increase in Australia's population over 5 years, despite the COVID disruption. 1.38 million of that since June 2022. Western Australia and Queensland have the most population pressures, but actually if you look in absolute numbers, Victoria's now got the biggest population growth. It looks like Tassie has kind of dropped off quite sharply now, so things have leveled out there. And Tarek says we need 110,000 new dwellings each year, even without immigration, due to changing demographic needs. I haven't seen the analysis behind that, but it's a fair point that even with a static population, you've got a lot of decrepit and obsolete housing stock that needs to be demolished and rebuilt. And that's even before you account for this massive change in population. So, yes, the bulk of demand for housing is still coming from relatively high levels of immigration, even if we're reverting lower. And he concludes that we've got an ongoing housing and infrastructure deficit. I think that's one of the points that certainly we've seen this in the UK is that housing is one thing, but what about things like schools and then hospitals and motorways that can't cope? But it's not just the housing component that struggles under the bulk of or the weight of population growth. It's all the other things around it too, which can impact livability. Yeah,
and I was just reading an article a couple of weeks ago around, I think it was in Western Sydney, don't quote me on this one, but they have to basically replace a lot of the old water pipes and Sydney Water and, just because they're getting a bit on now. And so it's also, you've got to, while you're sort of building new infrastructure, you've got to be repairing and maintaining existing infrastructure. And, that's becoming more and more expensive because governments and councils have been putting that off more and more so they can build the new stuff, right? So I I think that's going to come back to bite us a little bit. I mean, I think with demand for housing, population growth, absolutely over time, right? You got more needs for dwellings. But I think there's just naturally our owner-occupier rate's been falling, right, for so long. So, and when that's falling, I think a lot of those people are renting, right? And do they want to buy? Absolutely. When there's a rental crisis, when rents are going up, when vacancy rates are really low, when you want that security and stability, not only when you get into the family stage, but when you're getting closer to the sort of retirement stage as well, you know, that desire to own is really there. And what's happening is our owner-occupier rates reducing, and it's, you know, it does get up to those levels that we have been, but people are getting there much later in life. And so there's this huge pent-up demand in market already, together with the population growth. And I think a lot of people just forget that there's just natural demographics. I mean, Australia is not a Japan or a China that hasn't got a great demographic curve. We have got a lot of people in their sort of 20s and 30s that, you know, at some point, you know, couple up, or even if they don't, they still they own a home. And so there's just a future buyer pool of property is always there as well. That's, and, you know, maybe over a year or something, it doesn't make sense, but over 5 to 10 years, that's a lot more demand that enters the market. And if you sort of, what are they buying? Well, they're buying new properties, which we can't build anywhere near enough. It's just the realities of competing for labor resources, the cost to build. Developers are only going to build if they can make money, you know, the market economics. And also, you know, properties that are on the market. And, you know, I think I've mentioned this many times in this podcast before, but the average length of someone lives in their home is just getting longer and longer and longer. So it's getting harder and harder to buy property because people are just, you know, once they've got a home, they're staying in it. And so there's less turnover of properties. And particularly when you add in investors as well, I think there's the attack on super is just another thing that people are going to say, hey, now even concerns around AI, like if you're concerned about your future job prospects, what are you going to do? You're going to save harder. And you're also going to invest because you're going to know I'm going to need to build wealth because I can't just rely on my job for the next 20, 30 years. And I think that's going to start playing in people's minds as well. Yeah, maybe not they're going to leverage up to the nth degree, but they're going to do something because they go, well, I really need to, you know, not just be lazy and not take advantage of the opportunity. I probably should do something because super's not going to cut it for me. And also, I may not be able to have the same jobs prospects as I thought I would 5 years ago.
Yeah, I think whenever it comes to population growth and particularly immigration, it's always a highly charged subject, isn't it? I think if I go to Twitter, I think over the years I've been accused of being a population Ponzi booster and anti-migrant and prejudiced and so on. But usually, I think there's a lot of countries around the world now where the electorate wants lower levels of immigration and governments are by and large ignoring them. And Canada has found quite recently that actually they've had a spike in unemployment and they've had to slow immigration down. New Zealand has struggled with population pressures. Australia, pretty much all of Western Europe has. US has had migrant challenges at the border in the south and so on. I think in Australia, the surveys generally show that people are pro-immigration, but they would like lower levels of immigration. I mean, look, I'm a real estate guy. Obviously, more people is more demand. But yeah, I think what most people would like to see is a balance, really. You know, given where Australia is located in the world, you know, most of our immigration going forward is going to come from India and China. And, you know, that's a demographic shift for Australia. But, you know, I'm personally in favour. I lived in Asia for many years in East Timor. And, you know, it's a part of the demographic shift is that we'll have a fewer Brits going forward as the sort of £10 POMs drop off, and we'll have more migrants from India and China. But yeah, it's a highly charged subject, and yeah, people always get accusations fly here, there, and everywhere. But yeah, it's obviously topical for real estate because we've got record low rental vacancy rates, and we're really struggling to deliver the supply. So let's go through a few of your questions before we wrap up for the week. So first question from Jesse James. Your opinion on if the government will change negative gearing rules? Yeah, good question. I think, look, it's clear there's going to be some tax reform coming. I think we've actually, although we've sort of been seeing the budget get a boost from very low unemployment rates and very high commodity prices, that there's going to be a structural or underlying deficit that the government is going to want to tackle. At some point, unemployment rate's not going to be 4% anymore. We've got some spending challenges around various things like the NDIS overruns and other things. We've got a lot of public servants to pay for as well now. I think we've got 1 million. So, negative gearing. Well, look, the Treasurer, Jim Chalmers, said the research shows that changing negative gearing rules would have an adverse effect on housing supply. So when you've got record low vacancy rates, it's probably not going to happen. But I wouldn't be surprised if there are some tax changes. It might be potentially to capital gains tax, for example. There might be a change to the CGT rate, or maybe on a sliding scale. Maybe there'll be some kind of limits on negative gearing. Look, I'm flying blind here. Nobody really knows. But that was at least what the Treasurer said, is that they've taken some research on negative gearing. And if they were to remove it, there would probably be an adverse impact on the new housing supply. What do you reckon, Chris?
Oh, look, I think in a rental crisis, it doesn't really make sense, right? You've got too many rental properties out there, and rents aren't going up, and investors are basically just outbidding every single first home buyer. I think it makes sense, right? Hey, let's just slow down these investors, because basically they're forcing, or they're outbidding all the first home buyers. I just don't think that's the case. I think, and we've also got vacancy rates really low. I mean, investors are absolutely entering the market, but just due to where they're buying, they're not buying often with negative gearing. They're kind of buying with a lot of more higher yield. They're buying regionally. They're not so much in our capital cities. And I think that's another thing, is that the investors have shifted in terms of where they're buying, I would say, as well. I mean, they've tried it at multiple elections in the past. They've sort of said it's off the table at the moment. I agree, Peter. I think it makes more sense to change the CGT exemption, because particularly on a short time frame, basically getting a 50% discount over 12 months is pretty advantageous to, if you're only paying 25% tax on gains, but you pay 50% tax on income, or 40% tax, makes sense to sort of buy, flip. And I don't know, and you could easily see that discount get reduced, unless you own a property more than 10 years, and, encourage more long-term investing rather than sort of try to make capital gains and pay capital gains tax over short time frames. But yeah, I think there's other things they're going to focus on in terms of, I think this 5% deposit scheme and giving more power back to first home buyers there, and stamp duty concessions for first home buyers, and give them more power that way, rather than trying to really discourage investment, because they actually want a lot more investment into housing, not only for the money they make in terms of through development, but also to ease the rental crisis and make sure Australia stays on the map from a talent point of view, that we've actually got housing here that you can rent and buy that's more affordable.
I think Labour's got a bit of a spending problem at the moment. They will be looking for ways to raise more revenue. So let's wait and see what happens. It may not be directly from property, but it could be by superannuation or council rates or land taxes. Who knows? We'll have to see. Which way they go on that. But at the moment anyway, negative gearing seems to be off the table. Second question from Nathan. We're trying to buy our forever home, and it's quite specific what we're looking for. Real estate agents keep putting the pressure on that prices will boom soon. Surprise, surprise. But we just haven't found what we're looking for. We're in the Illawarra, New South Wales. Any advice, please? It's difficult, isn't it? This is the reason we get property cycles, because people feel as though when prices start going up, they feel like if I buy now, I'll just be paying more in a month or 3 months' time, and therefore it makes more sense to compromise on the asset and just buy something. So I suppose the sort of the other side of that is it's a bit like the old marry in haste, repent at leisure sort of thing. If you're buying a forever home, it kind of needs to be the right location for your needs, even if it means you don't have to change the floor plan or the decor or something. You do need to get the block right, and it needs to be something you're going to be happy with ultimately. So there's no easy fix. I mean, what would buyers agents do? That if you've got a specific asset in mind, you really need to get in the ears of local agents and tell them exactly what you're looking for and at what price point. And then when something comes along, whether it's pre-market, off market, or a new listing, you're the first person they go to. So Yeah, there's no real secret sauce there. It's just a bit of networking and sort of get the contacts book out. What do you reckon?
Illawarra is a funny place. You've got the north, which is sort of the Thurles and Ostermeers, and it's all sort of landlocked because of the escarpment in the Royal National Park there. And when you take away the busy roads, which I think's got to forget the name of it, and then you've got the train lines there as well, and it's such a small amount of houses that are along that sort of like stretch of the coastline there to the north. So it's really hard to find good properties in there. We've had many clients who, sounds like you, Nathan, have really struggled to find something good because a lot of the properties are dark. If they're too far up the hill, they're noisy because it's on the road or the train, or, and there's also some undulating land, so steep blocks and, things that aren't that family friendly. So we've had lots of challenges there. I would say just really explore a bit closer to the Wollongong sort of town centre if you're buying in the north. There's some, Mangaton and Fig Tree. You're probably already looking at these areas. Also, if you go down to the south, there is a lot of, Dapto sort of housing estates, but I don't know, maybe it's time just maybe a bit more flexible on your location. And can you be just as happy as a family if you, expand your search to include a few more pockets just to increase the chance of the likelihood of securing something? Often when clients are going down too much of a needle in the haystack strategy, it's great, and you definitely could have a priority in that. If something comes on and ticks all your boxes, go hard, get in early, a little bit similar to that client I mentioned before he brought up on the Central Coast yesterday, or expand your search and be a little bit more open to new options. A buyer that you might want to talk to, Nathan, is Matt Knight, guy called Presium, is his buyer's agents. We've worked with Matt a number of times on the Illawarra region, and, having a bit more extra help there, might potentially open up some doors there. So you might want to reach out to Matt.
Good guy, Matt. Yes, you're right. I haven't spent much time down there in recent years, but it's quite a narrow coastal strip, particularly on the northern end, isn't it? There's some cracking pubs along that strip, but it depends, I suppose, if you need to be in Sydney. If you don't need to be in Sydney, then you can go a bit further south, and there's some really beautiful spots down there. But the market's changed no end since I got married down there, which I think is 15 years ago plus now. So a bit of time under the bridge, and certainly apartment prices on the water at Kiama, I could barely believe the change. So last question before we wrap up for the week. Super Duper is the person asking the question. Any impact on property from changes to superannuation rules? Well, let's assume that the proposed changes to superannuation go through. Yes, there will be changes. I think maybe more so in the commercial property space. I think, look, for people who own assets and they're breaching the threshold and they've got potential taxes on unrealized gains, I mean, that's just a headache. That is just, it's not insurmountable. But if you own a medical center for your business, or if you own a factory, or if you own a farm in your superannuation, that's going to be a massive pain in the butt. I think at the macro level, how many people own properties in their super? Yes, some. I don't think it's huge in terms of the residential space, so probably not too much in terms of market impact. But if, as an individual, there could be some real sort of logistical headaches in terms of paperwork. I mean, how do you revalue a property? You've got to go through that process every year, potentially have unrealized gains to talk about. It's a horrendous policy, let's be honest. But yes, if you're in that basket, you might need to take a bit of tax advice. But what do you reckon for the sort of housing market overall, Chris? Any impact there?
I do think you change the incentive, you're going to change behaviour. And if you change behaviour, you're going to change markets, right? So I think it naturally, when it gets implemented, is it from, yesterday, 1st of July? Is it from 1st of July next year? Because it hasn't actually got legislated. Do they backdate it or they forward date it? If it's between 1st July next year, do people do giving while living? I think it makes sense, right? Rather than doing it on death, people got big enough money in super. They go, I'm going to start paying tax on this deal. I give it to my kids and my grandkids. Do I, stop putting more money into super, knowing that, I'm going to have a cap one day? Do I start buying investment property earlier? Do I pay off my home loan? Do I do renovation? So I do think it's going to have a huge impact on property because I do think it just changes people's mentality around super. Every tweak to it does that as well. And so, but yeah, how it actually plays out, I think some people are going to be more affected by others. Yes, some people are going to pay more tax, but that doesn't mean they're going to change their behavior. Sometimes human, changing sort of habits, or just they go, well, yeah, I'm paying a bit more tax. Yeah, I pay unrealized gains, but I've got it in a very sort of conservative way. I'm not buying any speculation stocks. I haven't got any really lumpy assets. I can afford to pay these taxes by just selling a little bit down each year, and it's not a big deal to me. And then you can have other people who are going to be like, I'm taking all my money out of super. I don't want to pay any more tax. I'm going to put this in my personal name. I'm going to give money to my kids, and I'm just going to avoid it at all costs. And so, but also to, accountants and advisors, maybe they'll also, some will want to keep it in, and some will want to be able to give some good tax advice and, come up with some, new strategies. And so it's going to be interesting to see how they all play. And I've spoken to different advisors and accountants that don't really want to talk about it because they're like, it's just so hard to get their head around. And I find is that they want to wait till it sees legislated. And, it's going to be interesting to see how the advisors in this space deal with it. Because there's also there a bit of a conflict of interest in terms of if you're an advisor, you want to manage the money. When they give it to the kids, that's less money to manage. And a lot of these things, unfortunately, affect their advice sometimes.
Sure, yeah. I mean, the law of unintended consequences, who knows? People might just pile more money back into the family home and leave the super for another day.
Yeah, that's true.
Yeah, so you never quite know how these things are going to pan out. So that's about it for this week. Test match for me this weekend, England v India. What have you got planned, Chris? Anything interesting?
Sister's finally moved into a house she renovated on the eastern suburbs, and so just helping her sort of get settled in, do a bit of a sleepover there, play football on Sunday, and just come back refreshed for next week. Anyway, thanks for having a chat, Pete. Thanks everyone for listening, and we'll have a chat next week.
Cheers, see you next time. Thanks.
Thanks for watching this episode of the podcast. If you want to hear more from us, you can get daily videos and podcasts on Rask's YouTube channel. Or if you want to enroll in a free course on investing, property, business, money, you name it, you can join over 34,000 other students and enroll in a free course on the Rask website. Simply head to www.rask.com.au and follow the prompts. Thanks for watching this Rask podcast.